podcast. My name is Jazz and I'm your host. Today we're going to be unpacking, unraveling, and discussing the tax strike, how to go exempt so the government stops taking federal taxes out of your paycheck, how to lower your taxable income / tax liability, the specific things you can do so that you don't end up owing the government a bunch of money at the end of the year, the potential to be audited if you choose to tax strike, and how you can get help with those potential consequences if you do get audited from people who have been tax striking for decades. We're going to go over all of it. So take a seat, buckle in. This one's going to be a doozy, and you're going to want to hear everything I'm about to say. So welcome. Let's get started. Okay, so number one, how do I stop paying federal taxes? Well, the first step is to do things that will keep the government from taking federal taxes money out of your paycheck every month. If you're a 1099, you are going to simply stop sending in your quarterlies. Now, before I go any further, I just want to preface this video by saying this is not tax advice. This is not legal advice. Everything that I'm about to share with you is readily available information that's already on the internet. I am simply consolidating all of that information into one video in the hopes that it would be a little bit easier for folks like you and me to tax strike. Here's the reality. Rich people, the elite, go years and years and years and years paying $0 in federal tax. And they do it by finding legal loopholes. And I'm about to show you how to do the exact same thing. Again, this is not tax advice. This is not legal advice. This is just education. Take what you want, leave the rest, do with it what you will. I'm just merely trying to educate people that you do not need to be rich to stop paying federal taxes. So let's get into it. The first step, as I have said, is to fill out your tax form. And this is for W-4 and 1099. I'm going to get into both. So if you're a W-4, there are 3 ways to go about keeping the government from taking federal money out of your paycheck. Federal tax money out of your paycheck. Let's backtrack a little bit actually. So you've already filed for 2025. If you are eligible for a return, you've gotten your return already. It is actually not too late to go tax exempt for 2026 and onward. But actually the misconception is there's a deadline to do it. What I've been told by tax striking movements is you can actually change your W-4 or your Schedule C 1099 paperwork at any time during the year. So for W-4, you can check the exempt box, which actually is apparently a lot more susceptible to being audited. If you do check that exempt box underneath 4C, the second way is to claim the max dependents, which will slightly lower your risk of getting audited. And the third way that is the least likely to be flagged for auditing is to claim either the standardized deduction or an itemized deduction. What's the difference between a standardized deduction and an itemized deduction? Well, you can claim both on your W-4. The standardized deduction is a certain amount, as seen above, that you can claim as either a single person or a married individual. And it doesn't matter how old you are. If you think, so there's another way of doing tax avoidance that rich people do all the time, and it's called itemized deductions. This is when you figure out how much of your money is not taxable by item as opposed to just the standard. So what you're going to want to do to figure out if you want to go standard or itemized is get in touch with a licensed tax professional. They will help you review your financial situation and help you figure out which one is better for you. So again, the standardized deduction is this formula above. Once you've met with a tax professional and you decide, you know what, I can actually lower my tax liability more with itemized, then you can choose between those two. If you think the itemized deductions will exceed your standard deduction, then you can choose the itemized. So You decided checking the exempt box isn't for you, claiming the max dependence isn't for you, and standard deduction isn't for you. You want to do your itemized deductions on your W-4. And we will get into what to do as a 1099 in a moment. So don't worry, sit tight. I got y'all too. I got my 1099ers. Don't worry, I'm going to take care of you too. Standardized. First, you're going to want to get your W-4. There is actually a whole worksheet on the back for how to figure out your itemized deductions for 4B. Again, you're going to want to do this with a tax professional if you want to do it, the safest, most accurate way. You're going to find all your itemized deductions on this worksheet. Then you subtract the standard deduction from that, from being either a single filer or a married filer. And that is what you're going to put in 4B. Okay, let's move on to a 1099. You are going to want to use what's called a Schedule C form for standard deduction or itemized deductions. If you are self-employed, you are a 1099. If you do not have a boss and you employ yourself. If you are employed by another person and or entity, you are a W-4. That's the difference. There's no difference between being a W-2 and a W-4. They are two documents of the same system. You are employed by someone or an entity. You fill out the W-4. Your employer is responsible for the W-2, and all that is a statement of how much you've made through the year. Now, to effectively a tax strike, you do not have to lie about the amount of income you made. Lying about the amount of income you made is how people get in trouble. You could go tax exempt and be 100% honest about how much you made through the year. That's part of the process. So do not lie about how much you made. That is immediately going to get you flagged for auditing. Moving forward, 1099, Schedule C form. I'm going to be perfectly honest with you. This form is confusing as hell for me, okay? I am not going to dig through the itemized lines of this form. I do not know how to do it. I do not want to mislead anybody with false information. Please, if you're going to do a standard deduction or itemized deductions as a Schedule C 1099, please get professional help so you do it correctly, okay? So, first step done. You've gone tax exempt. You either checked the exempt box, you claimed max dependence. Now, if you claim max dependence, you are going to be finding ways to reduce your taxable income or tax liability the same way as everyone else. Okay, so don't worry about that. You've checked the exempt box, claimed max dependence, or you claimed standardized deduction or itemized deduction. Now, the federal government is no longer taking federal taxes out of your paycheck. Woohoo, I'm done. No, baby. I'm so sorry, but we still have a lot of work to do. It's not hard and impossible. There are just several more steps that we're going to go over to be an effective tax striker. Okay? This is information I've gotten from tax professionals, long-term tax strikers. Not advice, just trying to educate y'all. Because I don't think it's fair that rich people find ways out of paying taxes all the time, every day. Corporations get away with not paying taxes all the time. I think it's more than fair that working class individuals don't have to pay taxes either, federally, if rich mega corporations and rich elites aren't. Whether you want to pay state tax or not is up to you. I live in California. I'm still somewhat okay with where my state taxes go, so I'm just going to keep paying state taxes. This video is about how not to pay federal taxes. I'm not going to get into state tax because every state's different and I have not done any research on that. Feel free to do your own. This video is merely for how to stop paying federal income tax. Okay, what do I do after I've gone exempt? Now, boys and girls and theys and thems, we are going to find ways to owe the government as least amount of money as possible, if on the rare chance you do get audited. What's auditing? Audited is when the IRS randomly selects you to either be made an example out of, or you've done something on your tax form that could potentially raise an auditing flag. I can't say like who gets chosen and who doesn't. Like, I don't really understand that process. I just know and want to inform you for educational purposes only, not advice. Everybody's at risk for being audited. However, there are ways that you could protect yourself if you do get audited and owe the government as least amount of money as possible, if no money at all. Here's the ways how to do that. The easiest, most straightforward way is to invest some of your taxable income into retirement accounts. There is so much amazing information, so many amazing websites online where you can learn about how retirement accounts can lower your taxable income. The first one being, if you're a W-4, a employer-sponsored retirement account. That could look like a 401k, a 403b, or a 457b. Whichever one you're under is going to be at the discretion of your employer, depending on what kind of business you work for, et cetera, et cetera. If you're, government entity, healthcare, whatever, your HR department can help you figure that out. You're probably already investing in it as we speak if you have opted to have your employer withhold some of your money and automatically put it into your employer-sponsored retirement account. Check with your HR, figure it out. You can contribute up to $23,500 to these types of plans if you're under 50. That's $23,500 that is not taxed by the government a year. If you're older than 50, you can do up to $7,500. If you are between the ages of 60 and 63, you can toss in an extra $11,250 a year. I have linked the website that goes more into this in the comments below. Any resources I talk about, any of the resources where I pulled the pictures that I overlay are going to be linked in the comments. You're going to want to dig deeper. You're going to want to do your research to figure out what situation works best for you. What combination of tax deductions or, tax avoidance works best for you. Please do your research. Above all else, please consult with a licensed tax professional. If you're a 1099, or you simply just want to have a portfolio of retirement accounts, you can invest in what's called an individual retirement account or an IRA. Roth IRAs are not a good idea for lowering your taxable income because they are post-taxed contributions. That means that Roth IRAs do not reduce your taxable income through the year. You're going to want to do a traditional IRA. Contributions to a traditional IRA, if you work with a professional and you pick the right one, with a, accounting professional or what have you, they can reduce your taxable income for the year. However, you will be paying taxes on it when you withdraw and eventually when you retire. The important thing is that we're just trying to keep the federal government from getting our money now, in the near future, or for your whole life, whatever you decide. So that's kind of like where we're coming from. It's like, okay, yeah, some of these options are taxable decades later or whenever I decide to retire. But the main point is that this awful administration that we have right now, and potentially, I'm not going to go too much into politics. I personally think that all the politicians we have right now on both sides are corrupt, So my personal reason for tax striking is I don't want to feed into the system, period. I don't care if you're a Democrat or a Republican. If they've shown us anything in the last several years that both sides are corrupt, again, not going to get too much into that because I want to focus this video on tax striking. I'm just warning you, that you will have to pay taxes on your retirement accounts eventually. But as of right now, that tax money is not going to be given to the government in the near future. So that's kind of the point. So that's retirement accounts. Okay. So this method that I'm going to go into next of reducing your taxable income is kind of exciting. I feel like it's very confusing on purpose. I'm still trying to understand it. I'm still working with my, tax professional and accountant, trying to understand how I can navigate the field of an LLC, which stands for Limited Liability Company. This means that you have started your own company. Let's delve into that. There are a lot of things that you can do as tax write-offs if you have your own company. you can also register your personal assets and belongings under that LLC company. So they are no longer under your individual control, but they are assets of your company. And the IRS can only seize individual assets, not business assets. Again, do your research on this. This is not advice. This is just merely education I'm sharing with you. So one of the ways that you can find a ton of tax deductibles and protect your property is by doing an LLC. Now, here's the thing. If you follow the proper procedure for tax striking, you are not going to have your property seized. That is very unlikely. There are so many steps that happen before that. What's most likely going to happen if you get audited is you're going to get a very strongly worded letter, an audit letter from the IRS. It's going to claim that they're going to bust your door down and claim your assets and levy your bank account, blah, 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 blah. Legally, that can't even happen right away. They're not going to come bust, especially if this is your first year tax striking. They're not going to come bust your door down, take you to jail. You're not going to go to jail. The only people that have gone to jail for tax striking are people who have lied about their income. If you are honest about the amount of income that you have made at the end of the year, whether you owe the IRS money or not, you are not going to go to jail. This brings me to a really important point. There is a website, an organization of people called No War Tax Resistance Coordinating Committee. Brother, I had way too much coffee today. I need to calm down. They are an organization that has helped people not pay their federal taxes for decades. They have helped people tax strike in a way where if they even get audited, they are facing the least severe consequences that are super easy to deal with and manage. This website has everything you could possibly dream of for tax striking. How to do it, the various methods that I have already talked about, what happens if you do get audited, and how to avoid facing, more severe consequences that the IRS threatens but rarely ever follows through on. I would highly recommend to check out their website. You can schedule a one-on-one with a tax resisting coordinator counselor to help you through your individual situation. What's your risk of actually being audited? What are your specific risks of the consequences of tax striking? Which again, almost in every single case, if you are honest about your income, are going to be very minimal. People who tax strike correctly, there's so many testimonies of the worst case scenario is they go on a payment plan every year. And it's like super low monthly payment plan. Anyways, I'm not going to guarantee you any outcome because this isn't legal or tax advice. Again, just education. I would highly recommend you to check out nwtrcc.org, listed in the comments below, to get individual help with what method of tax striking is best for you and how to mitigate and navigate through potential auditing consequences. However, moving on. So you have your LLC. There is an amazing woman on YouTube. Her name is Aiden Durham. I actually have no idea if I'm saying that right. She is an attorney. She has 172,000 subscribers. Her whole channel is dedicated to basics about LLCs, how to do it properly, all the tax deductibles that you can get with an LLC. And let me tell you, there are a lot. There is another website, resistthesys.com, that has a whole list of tax deductibles as an individual and LLC. I have also linked below. There is so much good information about tax loopholes that I have compiled for you because you deserve to know. You deserve to have all the same opportunities to do tax avoidance that rich people do. It's not fair that they don't make this information readily available to the working class on purpose, because the elites want to stay in power. So I would highly encourage you to check out the websites I just listed. This amazing YouTube channel. Again, this woman has dozens and dozens and dozens of videos solely on LLCs. I would highly encourage you to check it out. However, let me just, to pique your interest, give you a couple things that you can write off as an LLC to lower your taxable income. Startup costs, your rent can be listed under your business expense. Hello, lowering your taxable income by quite a bit. utilities, phone, internet, your home office supplies, vehicle mileage, depreciation of any, technology or vehicles you use for your business, inventory. I mean, there's so much. If you decide that you want to start an LLC, well, what can I start an LLC for? Anything, babe. Anything. I'm going to be starting an LLC for being a quote unquote content creator, for making Instagram and TikTok and YouTube videos. Like, you can make an LLC for anything. So I would highly encourage you to check out all the information I've listed below on LLCs, how that can protect your assets and lower your taxable income. This one's not quite as popular because, and I understand, I can't afford to be giving a ton of money away either. However, you can lower your taxable income by making charitable donations to charity organizations and nonprofits. I do want to warn you that not all nonprofits are actually operating as a nonprofit. It's really important that you do some research into whatever charity or nonprofit you choose to donate to. There are nonprofits who have historically gotten in a lot of trouble for actually keeping all the money for profit. All you have to do to be a nonprofit is to fill out a little government form and label yourself, I think it's like 503C or something, I don't know. But anybody can be a nonprofit just like anybody can be an LLC. So it's really important to do your research. Number one red flag on a nonprofit that's not actually a nonprofit, not actually giving back to the community, is they refuse to make their financial audits available to the public. Number one red flag. That means that they are paying their friends to do whatever. It's totally nepotism. They're not actually doing anything to serve the community, or they're pocketing all their money as business expenses, and they either give nothing back to the community or very little back to the community. So if you were going to donate to charities and nonprofits, I highly encourage you to donate to smaller local charities and nonprofits, more local, near you, or that have a credible reputation of actually being nonprofit and giving the majority of their money back to the community. So that's the little caveat with donating to charities and nonprofits. And last but not least, you've gone tax exempt through various methods. You found amazing tax deductibles to lower your tax liability and taxable income. What do I do now? Again, the last step is to protect yourself if you are worried about the risk of being audited. You want to go to NWTRCC? They got everything. They have individual counseling on how to go tax striking, what financial situation might work best for you, stories, testimonials of long-term tax strikers, people who have been tax striking for decades. They have a full rundown of potential consequences and how to keep yourself safe from those consequences, how to navigate those consequences. Tax striking is not only doable, but it's totally plausible and easy to do if you do the research and you take advantage of all the education that exists out there, especially from all the resources that I've given you below. So that's tax striking in a nutshell. Please, please, I encourage y'all to use the comment section for polite, respectful discourse. If anyone has experienced tax striking or wants to share their ideas, if you have ideas that I haven't listed in this video on how to successfully tax strike and avoid the consequences. So yeah, let's stay empowered through education. Thank you for joining me as I break down the tax strike. If you like what you heard today, like and subscribe. And thanks for joining the Civil Disobedient Podcast. We'll see you next time.